Stock market analysis and projections on the S&P 500. Some important information for you that you can see, but make sure that you read this slide first. This talks about our approach to the markets and how what it means to you when you apply it, and the important aspect of trade ownership. You always have to make the trade your own. Boy, we got analysis coming up, but you got to look at this. I mean, this is just fantastic information, and you're going to learn to do analysis just like we do. You've seen the great work from our analytical team, and now you can learn our method of analysis, developed over 50 years. This is our Cycle Analysis Workshop Special. It took me 2 years to write and over 6 months to produce this workshop. There's 24 video modules, plus many tools for text videos that you'll be able to learn so much from. And you're going to get online lifetime access with no special platform required. You will never look at charts the same way as you did before. You'll be able to improve your directional decisions and project in time and price, which hardly any other analytical methods can do. And you're going to get bonus items from us. The first 15 people to invest in this workshop will get a collector's book, The Profit Magic of Stock Transaction Timing. This book has been out of print for decades, and it's the one that I read almost 50 years ago, from which our style was developed. And we have been saving many of these collector's books to give away just at a time like this. And there's a new video coming, so there'll be 25 modules using intraday cycles for short-term swing trading. And our level 4 members will get an extra $100 discount. So if you're not a level 4 member, you might want to step up to that level. So this is a special $400 discount. It's just $897 for this amazing workshop, and again, an extra $100 discount for level 4 members. For information, go to the top of askSlim.com and watch the video that's there in the sign up area. So just click the Learn More button, and you'll be able to see the whole list of the video modules that there are in a free little video that you can watch to learn about cycle analysis. Or write to Matt at askSlim.com for information. This will be an amazing investment for you, and one that you will always be pleased that you did. Thanks a lot for listening. Stock market S&P 500, multiple time frame analysis. We're going to look actually at the SPX and the VIX today, and you're going to see our daily snapshot at work. So some great analysis coming your way. Let's start out by looking at the chart of the S&P 500. So you're looking at weekly and daily chart. On the left, we always do multiple time frame analysis. It's important to us to be able to look at the dominant forces in the market as well as the shorter term. And even when we do analysis for intraday analysis, we always use at least 2 different time frames. So let's look at the weekly first. We have been looking at the corrective period and had this yellow area right over there for weeks and weeks and weeks, waiting for the market to tell us that it had turned over, that it was forming a top. Saying that through this whole period over here, it's been bullish, and you can see our reversal scout right over here. This is a level 4 proprietary indicator, moving to the upside and pushing the market up this whole time. This is money flows. This is money coming in from the intermediate and long-term holders that was pushing the stock market up. And now you could see right over here that it turned over and was telling us that the market had likely peaked. We had talked about a minimum of a 5.3% correction, coming right down to the intermediate 23.6%. Let's take a closer look at that, and you can see as of this morning, absolutely nailed it right there. Now, we thought that the greatest likelihood was that it would decline 8% down to around these levels right over here. This is 48.37. This 38.2 level right over there is 48.20. So right in here was where we thought the most likely correction was, that would take you down to mid to late May or potentially out into early June. The daily chart actually points to around June 2nd or something like that. So we had thought it would be a 350 point to 500 point correction. You could look at our past videos for well, a couple months, and we talked about that. And so far we've come down from 52.64 down to where we are right now, under 5,000. So that's about a 270 point decline so far. So we're really expecting a greater amount of that. So we're going to look for this as the most obvious level right over here, very close to 48.20, with a pretty good, probability that it gets down here. This is 46.82, and these are the extreme levels, and it would really take a decline much harder than we expect to get you down into this under 4,600 level right over here. This I would consider unlikely right now, while when we thought the possibility that the market would peak sooner, that was more likely. But now that the market extended longer on the upside, it limits the amount of time available, and it also raises the objective, the corrective downside objectives. So that takes us to the most likely here, closer to the 4,800 level. And when I look at the daily chart, and I'll just switch right over here, you can see this beautiful action. So each of these cycles, and for those of you that are brand new, on the bottom are the cycle brackets, and what those are is just a drawing tool to help us understand the energies of the market. If I look back at this cycle right over here, you can see that it shows you the dominant distance right over there, and the cycle's measured from low to low, and it gives you the average period in here when we set in these cycle brackets, and you could see the dominant cycle here and the dominant cycle here and the dominant low out over here, which is right around the end of May to the beginning of June, like points to 531 to 6.3, something like that. There's a weekend in there, so a Friday is 531 and the Monday is 6.3 right there, if you want to get really precise. So we're projecting that there would be a short-term low right over here. You could see these lines right over here. This is the low timing window for the short-term low as you get this first decline. Now look at the slim ribbon PO on the bottom. This is another one of our proprietary indicators, only available to level 4. This gives you the upside momentum right in here. And when it's green, the slim ribbon is positive and telling you there's upside momentum. And when you get an arrow, it tells you that it's likely you're going to get an upside resumption. And each one of those was just absolutely spot on when you look at that, and giving you the sense that you were in this uptrend. But that changed as it neutralized here. As you can see, get a little closer look there, and then has turned red as the momentum in here. So likely this is going to get a bounce. It'll get over the 75 area. It'll give you a down arrow somewhere over here, and it'll move lower again. We do not have an anchor point in here. In other words, I can't perfectly measure where the upside bounce is going to be. And I'm beginning to project what this looks like in here. So again, we talked about some bottoming happening somewhere in here. And then once we get an anchor point, I'll know exactly where these resistant sell zones are, and we'll be getting ready to sell them in a bounce for this decline. And again, we're projecting close to that 4,800 level out over here towards the end of May. These are what we call ideal cycles and ideal projections of everything works out as they should. And this is all based on probabilistic analysis, based on putting the sum of the evidence together on the way that we approach our analysis. So some kind of a bottom in here in the next week, then moving to the upside somewhere in here, hitting the sell zones right in here. Remember, it's listed declining because I don't have a bottom yet in here to really measure it from. And then once it bounces, then turning down again. And this is a problem area right over here. This is at the time frames, and I'm just going to blow this up right over here that you can see. When there is a downside alignment in the weekly and the daily, and both dailies right over here, and both weeklies over here, the minor and the dominant, when all four of those are lining up is the time period for the capitulations on the downside. That's when sellers become very anxious and sell them very hard. So that's why I say over here, looking at the weekly, it could get down under 4,700 because I don't really know what that capitulation is going to look like. If you want to look further back, let's just go back over here that you can see. This is the period where all four of them aligned on the downside last October. And we absolutely nailed the timing on that bottom over there. Also, as you could see, the bottom's right in here and the bottom right in here. And if you just look at this last cycle right in there, and I messed that up, so let's just go back over here, and this last cyclical period right in here. So I'm looking here at that daily chart right in here, and you could see the momentum was negative right in here and pushing to the downside, just as we have right over here, momentum pushing to the downside. This last decline after the bounce into the sell zone, now this is exactly what I'm showing you will likely form coming up, took you from let's just say 43.95 down over here to 4,100. So that was almost a 400-point break in there. Almost a 300-point break in there in just the last 10 days or so to the downside. That's that period of a potential capitulation, and here's where it is right over here into this period in May. It doesn't have to be 300 points, but it certainly could be, and if you get the bounce right to resistance at 5,100, 300 points to the downside takes you right to 4,800 if it matched what we were looking at in that similar period over here. So again, momentum turns negative. Momentum turns negative in here with the slim ribbon. It is red right over here. The period of risk coming in here, the potential capitulation right over there. That tells you why we had looked at this as being this period of risk, why we expected a correction in here. But now look at where the low is here and look at where the low is likely to be here. This is a very positive structure, a very positive condition in the intermediate and longer term. That says to me that once this correction is over, we're going to get up here and test these highs later out in the year. So that's the highest probability. Again, this is probabilistic analysis. Even though it's an art form, there is very specific things that we look at, and it says that this correction is likely a correction in an ongoing bull market with higher prices to come next year. But in the meantime, there's potential pain coming here in this next, well, we'll just call it 4 to 6 weeks, where there could be some sizable decline. So that is a look at the stock market. Okay, let's take a quick look at the VIX. We had talked about an important cycle right over here, which was a 29-week cycle that was obviously to us going to make a bottom because we were looking for a peak in the stock market at the same time, and miraculously, well, maybe not, that really worked, and you could see the explosion in implied volatilities on the upside. Remember, VIX is a reflection of the demand for puts, or how much investors are willing to pay for insurance. And as you can see in here, they're really stepping up to pay for it. Now we have this projected up over here. It's very likely to get to the high 20s or higher sometime out in this late May, early period there, and then probably be done with that correction and the VIX beginning to come down. When you look at the shorter term right over here, it really calls for a decline sometime into this maybe third week of May period right there, maybe second week of May, and then another upside move of some significance out into that late May to early June time frame. So that's very much in alignment with what we're expecting. This period in here on the daily chart that we're looking at, which takes you out through April into early May, this is the period that we showed on the stock market on the daily chart on SPX that could be the bouncing period that we're looking for. And then when that's over with and the market begins to move down again, then you get another upward spike in implied volatility. So that is a look at the VIX and what very well could be setting up a choppy period just ahead for the stock market as it tries to bounce, tries to grope for a bottom, and then sets up another sizable wave to the downside and a big jump in implied volatilities likely still ahead. I want you to see what's coming up in here next, because this is just some more information that really enhances the work that I just showed you and the work that our team does. So watch this. Okay, so now let's take a look at the SIR Daily Snapshot. Matt puts this out every day, does a fantastic job, and it's got some great information in there that I really thought it was worth sharing, and you'll be able to see what comes to our level 1 members every single day. So this is the daily snapshot right over here for today, 4/18, and we're just going to scroll down a little bit in here so you can get an idea what's in here. Matt puts out a technical briefing every single day. There's the S&P 500. You could see that, the NASDAQ right there with all of the key levels, key numbers, and the Russell right there. Not going to really look at that right now, but become a level 1 member. You can see that update every day. I showed you the charts on the S&P 500 already. When you look at that, those charts exist right over here. So you'll be able to see that and more, because we've added in now the 2-hour chart right there with all that information and our proprietary indicators on the bottom. You could see the daily chart that I just showed you also right in there and updated. And here is the weekly chart right over there. So this is all included in there so you can get an idea. You can look at the outlook in here for the short term, and Matt has all that information in there, looking at the pattern structure, the slim ribbon, the reversal scout. So this is for the shorter term, so it's daily and intraday charts that we look at, and you can see that is all negative, of course, right now based on the conditions of the stock market. Important to be able to always look at that and get an idea of if there is an alignment on that information. Intermediate outlook right over there, as you can see, and this is really where it's important to look at if you're a swing trader or investor, because this information gets to be really important. You can see on the weekly chart on the S&P 500, the pattern structure is positive, and on the short term, a pattern structure is neutral in there. So you have a reversal scout and the on both the short term and the daily. On the weekly and the daily, giving you this declining momentum conditions. So when you look at this, it really says that, everything in here looks like it's a correction in an intermediate upward trend. So that's what we've been saying, and this is really reflective of that. So that's important. And if we look at the long term right over here, you can see also that on the long term, it's looking at monthly and weekly charts, and the momentum condition being negative over here on the weekly chart shows you that it's pretty likely that with all of this positive right over here, if you're an investor, then you get a pretty good sense right now that, we're in a correction. These would have to just change pretty significantly to give us some indication that the market was in a bear market, but the weekly chart would have to turn into a negative structure, and that is just extremely unlikely right now. So that's a look at the S&P 500, and of course we have that on the NASDAQ and on the Russell also. Let's just look at this really quickly. Again, the charts are available there in the NASDAQ for you to see by clicking on that and see all of our analysis. And let's just look at these outlooks right over here. So this is the short-term outlook. As you can see, as expected, all of the pattern structures and momentum conditions on the daily and intraday are negative, and that is what you expect to see during a decline and a corrective process going on in the market. Here you could see the intermediate, and again we're getting an indication that the pattern structure is positive, but the short-term daily charts and the momentum conditions on the reversal scout are negative, so that says it's likely a correction that's going on in a positively configured pattern structure. Again, that means that it is a correction. It's not very likely to be a bear market condition unless things would change very dramatically. And the longer term outlook right over here, you can see that the momentum on the weekly is negative, but basically everything else is positive. So for investors, this is very likely a correction in an ongoing bull market. We can do this again for the Russell right over here, but you're going to get the same type of information, so I'll save you going through that again. Become a level 1 member and you'll be able to have all of this. And I love this chart. I mean, this is really a great chart to be looking at because it gives you the particular index and you just read it across. Long-term trend condition, long-term momentum condition. These are all positive. This is really a bull market indication. The intermediate trend condition right over here, the Russell has turned neutral, but the other ones are still positive on intermediate trend, and the momentum conditions, of course, are negative. So again, all of this, looking at this longer term and intermediate term, gives us signs that we are in a corrective period. But now when you look at the short term for traders and the interdays right over there, that really gives you the sense of what's going on right now with everything being very, very bearish. Now, when we get into some upside movement in here, you're going to see these near terms turning bullish right there, and you'll probably still see this as bearish, and then you'll know you're in an upside correction of this downside move that we're in. And so these would be bulls, these would be bears, and that would be a condition that the market would very likely turn back to the downside. To get back into a very bullish condition, these would all have to turn bullish again, as we saw for so many weeks. So this is just a great way to look at the conditions of the market. Love that chart. Matt does an incredible job on this. As you see all of the charts available in there, and this is the daily snapshot for 4/18. And again, I really encourage you to become a level 1 member if you're not already, or if you're a member, make sure that you do go back and refer to this information because it's just absolutely great work. That's a look at the SIR daily snapshot at work. So that was a look at the SIR daily snapshot that really gave you a sense for how we share a lot of information with our members. Again, you can become a level 1 member and get all that information. You get a sense to what our overall analysis here is in the stock market, and that is bounces are likely to come, and there's still a lot of risk ahead in this corrective period. You want to learn to do the work that we do, that you see Katie and Matt and Arvi and I do all of the time. You got to take our cycle analysis workshop. Take advantage of this $400 discount and just $897 for 24 plus video modules and lifetime viewing of this. You're just absolutely going to never look at stocks and never look at charts on stocks and indexes as you did before. So go to the top of askSlim.com, click the Learn More button, and learn more about this great workshop.